going on, guys? NQ Chef here. We're in episode 1, ICT 101 Mentorship. And like I said in episode 0, we're starting off very basic. And if you know all this, you can skip it. I'd recommend to stay through it. Maybe some things you don't know. But this is for the very beginners who just started trading, who need to know what's at stake. Like, why are we doing this? Why is it worth it to trade? Without further ado, let's get started. Right. What are futures and prop firms? And starting off futures, a future contract is a legal agreement to buy or sell an asset by the end of a set date at a predetermined price. So we have financial assets like indices, commodities, and you can trade those and you can hold those positions either short or a long. A long is when you buy and you make money when price goes up. A short is when you sell and you make money when price goes down. Right. So that said, any of any stocks like Apple, Google, you can hold them and there's no obligation to sell them by a specific date, buy or sell. Futures, on the other hand, you do. Some examples include Nasdaq 100, NQ, S&P 500, ES. There's gold. There's even wheat. Pretty sure there's soybeans too. And the reason why we traders want to trade futures is because they're leveraged, right? What I thought day traders do is they only trade indices and stocks. I didn't know there was such thing as leveraged financial assets, because with regular stocks, you need a lot of capital just to feel like you're actually doing something when trading. Like, let's say you try to make 1,000. You have, let me back up. You have $100,000 in capital, and you put all of it into a buy position. In order for you to make $1,000 profit, price has to go up, or the asset has to go up 1% in value, right? Because 1% of your capital is 1,000. With futures, it's different, and let's get into that. Right, in the CME, the stock exchange group, we currently have 2 different types of contracts for one asset, and soon 3, the nanos. But we're gonna focus on the e-minis, and the micro e-minis. So, and I'm gonna use the Nasdaq 100 for this example because the leverage on different contracts differ. But the e-minis are the highest leverage, the micros are the lowest leverage, and soon the nanos, I think in a few weeks actually, or a week, they're going to be the lowest leverage. They're actually going to be under leveraged. And I'm going to show to you how that actually works with Nasdaq 100 on TradingView. Right. Okay. So right here, we're on the micro e-mini Nasdaq of the September contract. And if we go to the market order here, we can see the tick value is $2.50 USD. Actually, let me change units. Can't change it. Change to 1. Sorry, to 1. So on the micro e-mini, for every tick, you will make 0.5 USD dollars, or price will fluctuate 0.5 USD. Now, 1 tick on the Nasdaq is 25 cents. Every time the micro e-mini NQ moves up $1, you would have made 2 US dollars. That's a leverage, and for many people that's small. So I want to trade 5 micros, or contracts, or cons, that's what people say. And when we change it to 5, our leverage goes higher. And what you will learn later in the series is we have different points, we have different sessions where we have different volume, different volatility, where price moves more sporadically with more volume, And there's at times where there's less volume, where price moves smaller in points. So there's different times where you can be using different leverage. And then that's the micro E-minis. Let's go to the oops, oops. There we go. So here we have the E-mini futures. And we can see, if you're paying attention to the chart on the 1 minute candles, we see price, it's relatively the same. It's not much different than the micro E-minis. And if we go to the market order, we see the tick value is 5 USD for one. So one E-mini NQ is worth 10 micros. And let's take, today was Monday. Let's take today's price action, for example. If we longed it here, stop loss here, TPs at this high. So that would have made $1,500 on this trade. Now let's really go back to the micros. The same chart. So if you wanted to buy, oops. Okay, that's supposed to be a limit, but okay. If you put one micro, there's a big difference there, right? And depending on whether you're trading prop firms or you're using your own money, your own capital, you're going to be wanting to be trading with different sizes, different contracts. And that we're going to get into a different video, but you can see here how the leverage difference. You see how micros are smaller, E-minis are bigger, and we use it to our advantage. You know, in time, the more experienced you are, you're going to want to use more leverage because you want to make more money. You want to have to build it up over time. You're going to build that confidence to trade, knowing that, okay, I know price will go down here, we're going to go higher. And we're going to learn all about that in the next videos. Okay, now let's go back to the slideshow, and now let's talk about prop firms. We learned enough about futures, enough for you to understand how they work, why they're important, why the leverage is important for traders, for us to make money with even small capital, even without prop firms. Let's get into it. Prop firms are companies that give large capital accounts to traders for a cost. And we have many prop firms, and it's actually a very popular thing now in the trading community. Whereas in 5 years ago, there was obviously it's still a thing, but it was not as popular as now. And companies, prop firms will give you accounts, $25,000, $50,000, $100,000, $150,000 accounts for a cost. And each prop firms, they all vary with their pricing for accounts, where you have to pay for them, activation fees, rules, how they pay you, consistency rules. And I don't want you to really worry about that yet. That's going to be discussed in later videos about prop firms. I just want to introduce you to them so you understand how you, the individual, are going to start making money over time. Not right away, not in a month from now, not after watching all of this, all of my playlists. You're still going to need experience and time. But I want to introduce you to it because for me, I spoke about a little bit in episode 0. What hooked me into trading was knowing about prop firms, knowing how useful they are and how you can actually make money. Like, you don't need that much money to start up. It's your skill and mind for prop firms. Because where prop firms benefit is when you just want to gamble, you just want to trade, and you're just paying account after account, and they're just taking your money, knowing that you're never going to get money from them. That's it. When I first also found out about them, it's only over time that I learned the rules and how it works. So I learned about, I'll give you the most basic for you to understand how you can actually start getting money. So it starts, most basic accounts, some accounts you pay more and you completely skip that evaluation, but there's more rules and the payment structure is a bit different. But the most basic ones and the accounts everyone should start with is evaluation to funded, and then live is a separate question. But it follows something like this. If you have a $50,000 account, you have to make $3,000 on that account to pass it. And you have $2,000 in drawdown, meaning if you exceed negative 2,000 on your account, you will lose the account, you breach the account, you have to buy a new one. But if you make the 3,000 on your evaluation, you pass the account and you're unfunded. And once you're unfunded, different prop firms have different rules on how you can get paid, and all earn payouts. So you choose your payout amount, $1,000, $2,000. Some prop firms allow very little, some allow a lot, big payouts. Regardless, some require consistency, some require amount of days traded before you can request your payout. And let's say once you made your $1,000, you follow the rules, you get it. Some even offer through crypto. And this is how you're actually going to start making money. Is you pass the eval, make that 3,000 for 50,000, and it differs when you have smaller or bigger accounts. And then you make the money on fundeds, and then you get your money. And then if you're a really good trader, like you're seasoned, experienced, eventually these prop firms are going to want to move you to live accounts, meaning you're going to be dealing with real money. Before, evaluations of fundeds, they're all simulated. Even the fundeds, I thought for the longest time, fundeds, you're already on with real live money, but you're not. You're still on demo simulated accounts. But the difference is they'll pay for you what you made. Live, you'll actually start dealing with real money, and I think live is a goal for every single trader, even outside prop firms. Once you make enough money, I think the goal is to be comfortable enough to grow your own capital, because then you're not subject to any prop firm rules. You make some of your own rules to keep your money, to keep you from blowing accounts, blowing all your money, and you follow them. You follow a certain risk management, and you grow your account over time. But I mean, to start putting in like $500 right away, bad idea. You should start with prop firms. But having live accounts, there's lesser rules. There's daily payouts, meaning you get whatever you make that day is what you can pull out. It's usually more worth it for the trader. And some people have strategies for just taking a payout on their fundeds and then blowing the accounts. And that's because of some prop firm rules. And I don't really want to teach those things, for one, because I hardly know those strategies, and two, I want to teach something more sustainable for you as a trader, and something that's actually going to be able to bring you money in your pockets, not fat stacks right away, but something that can keep you satisfied, maybe help you out in your life, something that you can feel, something you don't have to necessarily, buy a boat the next day, but some money you can have in your pockets, which you can say, this is actual progress for me, and you're comfortable with it. And over time, you grow from that. Not from making $0 to $10,000 a week, right? Anyways, I'm going to be talking about prop firms more on episode 18, unless I change the structure, but it's going to be in the risk management video. I'm going to be talking about the rules and how you can adapt your risk management to the prop firms and your account type. That said, I do want to shout out to some prop firms that I think are the best if you are looking into them. Lucid Trading, TopStep, FundedNext, and Tradeify. In my own research, I found that these are really one of the best prop firms. There's not many better. Lucid, number one, in my opinion. They're just awesome. Even though August 10th, I think it was, there's some Tradesy outage and they didn't recover my account. Still, they're the best prop firm, in my opinion. Not sponsored, hopefully one day, but it's my opinion. And that about concludes this video. I'll quickly combine together futures and prop firms, which I already kind of told you guys, but using prop firms, we trade futures with large capital. And I showed you an example on TradingView where we can make $1,500 in literally 30 minutes, right? It doesn't mean you're going to be doing that every single time, but that there's the potential. And I also didn't just plot out a random scenario. That was actually one of the trades I was looking to take today, but it didn't work out. But I showed that example for a specific reason, because that was actually the trade to take today. But we're going to be learning about that later. But it can get to a point where you can genuinely make thousands of dollars from the charts a day. And it sounds crazy. It sounds crazy until you start watching the videos, until you start watching price action, until you start actually seeing it can happen. You have that opportunity every single time. And granted, the opportunities are not always the greatest. Sometimes there is no opportunities on some days. But 90% of the time, you have an opportunity to pull out money from these charts. Whether that's $100 or $1,000. The potential is there. And I promise you, once I start teaching these concepts, you're going to be way more confident in what I'm saying. Because when I first started looking at the charts, it all looked like fuzz to me. Like, these guys are just gambling. Like, what do you mean you see some candlestick pattern, or you see some fucking wave on your screen, and you think it's going to go up or down? There is some truth to that, because some concepts are nonsense. But after 9 months of learning ICT, he proved to me, his videos, his concepts, his teachings proved to me that this is real. Everything that he's taught, that he's learned, is real. So I believe you actually can get a 100% win rate. 90, 100%. I think it's viable. You shouldn't expect it the next month or even the next year. The thing is, like everything, like literally every single thing you want to do, this takes time. And maybe not the amount of time that you want it to be, or the amount of time that you like. It might take way longer than you expected. I can attest to that. When I started in November, I thought I was actually going to be making 5,000 this summer already. But I didn't realize the road that I had to go through and the actual amount of growth that there is in trading. You might not want to wait it, but you have to wait. You want to be successful? You need time. And like anything, it's just a universal law. But I promise you, if you put in the time, to trading, you'll be successful. And if you put in the time into tennis, into volleyball, into painting, into paint, I already said painting. Into anything, into any hobby, into any skill. If you put time and effort, it's going to reward itself. Not many people want to take that risk. Because time is so valuable. But people don't want to give up that time. And that's what will separate you, that you want to give up that time for trading. You want to sacrifice time. And sacrificing time is the ultimate sacrifice. You cannot sacrifice anything greater than time itself. So don't listen to anyone. If you want to do this, if you truly want it. If you don't want it, just click X, leave the video. But if you do want it, it's going to take time. And be comfortable with that. Be comfortable that you might not see $1 for a whole year. Be comfortable with that. Because at the end of the day, whenever the finish line is, At that finish line is your fucking bank account full. That's the finish line. Who cares how long the fucking track is? The finish line is there. You can see it. It's a personal journey. Some people, I know people who are profitable like very fucking fast. Like relatives when they started learning and who they are now. But that shouldn't discourage you. It should encourage you. Saying, wow, this guy got it like in 3, 4, 5, 6 months. Wow. That's evidence that I can do it. Even if you're in it 1+ years. Anyways, the next video we're going to be in the next video, I'm going to be talking about where we start trading, like the platforms, and how we execute orders. I didn't know how to properly execute an order. It's like month 3 or 4 in trading. Anyways, I'll be talking all about that next video. I thank you guys for watching for episode 1. I thank you for listening to my rant because it's important. It's my passion. And if you can understand my passion, if you can feel for it, if you can respect it, if you can really feel this feeling, you're going to want to spread it to others too. This feeling of, I got it. Episode 2 coming up. Thank you for watching. Join my Discord, the Chart House. I'm live trading there every single day of Monday to Friday. I do weekly recaps where I recap my trades throughout the whole week on calls. You can ask me questions. You can put it in the question forums. Any questions you have about trading, ICT concepts, psychology, Christianity, the love of Christ, just ask me. I love to share this stuff. Join. You'll love it. I'm active. I'm always supportive. Thank you guys for listening. I'll see you in episode 2.